What's up, everyone? Today I'm having a closer look at Tesla. Now, this is a fun stock to trade because it moves quite a bit. So you can make a lot of money really fast, but you can also lose a lot of money really fast. So it's important to get these moves right. So the first thing we notice is that the stock has had a really rough few weeks. You can see it's dropped from about 300 down to 210, 211-ish. So that is quite a move. And a lot of people now are running for the hills. They're selling their stock. They don't want to take this anymore. But the question is that the right move, or should you possibly be buying at this level? So the first thing I notice is that I already mapped out my Elliott wave. So I have a 1, 2, 3, 4, and 5 wave move. The next thing I did is I wanted to measure what we can expect the fourth wave to drop with our Fibonacci retracement. So we traced it on right here. We can see wave 2 to wave 3. Now we can generally expect a drop to around 50%, which would be about right here where this dashed line is. So it should drop to at least 228. In some rare occurrences, it could only drop maybe to 38%, or it could drop all the way to 61, 62%, which is what we have right here. So, but I wanted to do a move between 50% and our 0.618 line, which is just over 60%. And that is in this range right here. So this is the range that I am betting Tesla turns around. Next thing I did was I mapped out what wave 5 is likely to do, because wave 5 is likely to be a symmetrical move with wave 1. So with these orange boxes, I've gone ahead and measured wave 1, and then I've mapped out on top of where wave 4 was likely to end. So we can see wave 5, if in fact this is a wave 5, is going to explode higher and get up into probably about the 320 range. So we can see the stock has already fallen into this range right here, and it's starting to move higher. Could it hold? Well, I guess we'll find out, but it hasn't quite touched this 0.618 line, but it got awfully close. So it looks like we're starting to move higher. There might be a little bit of volatility in here, a little back and forth action, but then it looks like we're a lot closer to the bottom than the top, and this thing is likely going to explode higher. So the thing to do here would be to buy. What's up, everyone? It's been about a week since we looked at Tesla, and I wanted to take another look to see how our recommendation is going. So about a week ago, we looked at it, and I think it was around $220, and we were saying that Tesla is poised to go higher. Now, at the time, a lot of people gave pushback because there was a lot of fear in the market. The market had just dropped significantly. You can see what Tesla just did, and people were scared to buy. But we used Elliott wave analysis, which is one of the best ways to try to predict where a stock is likely to turn around. It's one of the only ways you can accurately predict when a stock drops and then it will turn and start moving higher. So we kind of had this green box area where the stock was likely to make a turn and move higher, and that's exactly what happened. It started to bounce up a little bit. We entered a trade right here. It was a 250, 270 call spread going a couple months out. And this was a low probability trade because the stock would have to go $30 higher to get in the money, which it has done today. It is now in the money, and we're up probably about 100% on this trade, but we suspect it's still going to go higher, so we're going to leave the trade on. And when you have low probability trades that end up hitting, those turn out to be a lot of money. So that's the exact position we are in right now, and the stock is moving higher. We are happy, and if it does have a complete fifth wave, this thing's going a lot higher. But we'll probably get out maybe around the 270, 275 mark if the stock gets there. But right now, everything's looking good. The stock is doing exactly what we predicted, and we're looking to make more money. I want to check back in one more time on our Tesla trade as we exit this position. So if you remember right, we got into this trade about 3 weeks ago when the stock was trading about $220. We had an exit of about 270 because we put on a 250, 270 call spread. The stock has traded up today to about 273, so this is right in line with what we were thinking, and this is the perfect exit opportunity. Now, I still think the stock is likely to go higher. If I look at the Elliott wave, we can see wave 1. If we map that onto wave 5, we can see wave 5 is still likely to go well above $300. but we did a 250, 270 call spread, which is a very aggressive trade when the stock is trading at 220. And now that it's over 270, I want to go ahead and book those profits. It'll be about 150% profit in 3 weeks, so that's a great trade. That's exactly what we're looking for. And as this thing trades higher or lower, we're going to be watching. There's been a lot of volatility, which is why I'm looking to exit it today. And if it does drop, then this would be a great opportunity to jump back in as it continues its trend higher.